Hi, I'm Bridger Fates, and welcome to Master Stockman's sheep management videos. We're going to do 8 of these videos, cover some topics that should be interesting to all of you, whether you're managing a small farm flock or whether you've got a large range flock like this that we're out here with today. I think you'll find these videos interesting. We've got a good team. Whit Stewart, Dr. Whit Stewart is our sheep specialist, and he's going to cover a lot of ground in these videos. We've also got myself, Bridger Fates. I'll be covering the economics. Bart and Stam will be hitting on the range management topics, and Hudson Hill will be covering a lot of sheep topics as well as focusing on risk management. So that's the team. We hope to do these videos in a little bit more interactive format instead of just a lecture format. So you're going to see some live action like this, you're going to see some lecture, and then you're going to see some roundtable discussion between all of us. So if that's interesting to you, stick around. We've got some great videos on tap for you. Today in episode 4, Barton's going to talk to you a little bit about range management, some tools you can use to look at your range, and then he's going to finish up with a little bit on pasture range and forage insurance.
I'm Barton Stam with Master Stockman Consulting, and I usually handle the range management parts when we do programming. Today I'm going to be talking with you about a little bit about range management principles at first, but I'm also going to talk to you about the product called pasture range and forage insurance. And a lot of the time you'll hear that abbreviated as PRF. So whenever you hear PRF, just know that that's pasture, range, and forage insurance. We'll get into a little bit about what it's going to help us with drought mitigation. But first, let's talk just a little bit about some precip and forage growth principles so that we're all kind of on the same page. And then this will also build us up to why a product like PRF might be important and might also be a very useful risk management strategy for producers to be involved in. So on this slide, I want to talk about the importance of timing of precipitation. And the results I have up on this slide are from a very specific study in a very specific location that was in southern Wyoming that was done for a number of years. I think we had over 30 years of data from this site. And what we did was we looked at precipitation throughout the year and correlated that with peak forage production. So for this specific site, the winter precip, and we define that as October through March, had basically no correlation with herbaceous forage production. If we took winter plus April, then we got to a 9% correlation level. But here's where it gets pretty good and where it really starts to show the importance of timing of precipitation. And that's where, if you look at that April, we had above 50%. And even more specifically, if we looked at that 1 week, in this case, for this site, for this specific location, that week of April 12th through the 19th, that's on average across many years had a 74% correlation. So what that's saying is that if we don't get that precip, especially during the month of April, but even sometimes more narrowly than that, specific weeks, that we are going to suffer a lack of forage production because of a drought that's happening. Now, then you can also look at, there was a couple more months that we looked at, May and then April plus May. Again, the correlations weren't real strong. They were nowhere near as strong as April. Now, for your locations, it's going to be a lot different than perhaps this location was. If you're at a very low elevation site with a south facing aspect, it could be earlier. If this was a high Forest Service allotment way up in the mountain somewhere, that important month or important week is going to be way later in the year. Additionally, if you're dealing with warm season grasses, your important months for precip are probably going to be more like May and June rather than April here. So it's real important in any time when we're looking at managing our rangelands or our forage in general, is to be watching not only the amount of precipitation that we get, but when it comes. And generally, the most important precip you'll get is going to come right before and then during green up. That's when you'll get your biggest bang for your buck on growing forages. So then I want to, when we're looking at managing our rangelands, I like to have producers look at their short and their long-term goals. And so I kind of have the short term goals there on the left side of that slide and the long-term goals on the right-hand side. And they definitely go together, but for me, it helps to separate these out just a little bit. And so the first one I have up there is grazing sensitivity. And what I want you to think about there is if you were a forage plant or if you were a grass that was going to be grazed at some point, when are the times of the year that you would least want to be grazed if you were actually the grass plant? And a lot of times we think about those times being during the spring or the spring growth. And why is that? You know, the plant is young, it hasn't really reproduced yet that year. We also have some things going for us sometimes in the early spring though. Hopefully we've got soil moisture and hopefully we've got the right soil temperature. It's when we don't have the right soil moisture and we don't have the temperature that growth is going to stop. And if growth stops and we're still grazing and that those grass species or those forage species haven't had the opportunity to reproduce yet, either vegetatively or by seed, and that happens for multiple years in a row, that's when we could start having maybe some issues with overgrazing, and we start shifting the competitive advantage from the desirable species that we want to less desirable species out there that may not be quite so palatable, or they're weedy, or just invasive. So then the third bullet point I have up there is really dealing with the difference between moderate grazing versus heavy grazing. And the percentages up there are the percentages at which they're the percentages of soil moisture based on how heavy the plant is being grazed, where the plant will begin to wilt. So let me explain that for just a second. Under a moderate grazing scenario, and we usually define moderate as somewhere between 40 and 60% utilization. Under a moderate grazing scenario, most of our rangeland plants can handle a 1 to 2% soil moisture without wilting, versus a plant that's heavily grazed, so above 60%, they're going to start wilting when the soil moisture gets down to about 6 to 8. And that's because the part of the plant that we can't see, the roots, which are truly the perennial part of the plant, under heavy grazing scenarios, the roots stop growing. Now, that doesn't necessarily mean that there's never a time that we can easily do some more heavily grazing, especially during those dormant seasons. But really watching about our grazing sensitivity, especially during the spring, is a great management technique for keeping your forages robust. Then over on the right-hand side, we've got our more long-term goals. And in the short-term goals, we really sort of focused kind of on individual plants and how that individual plant was dealing with the grazing pressures and also dealing with the soil moisture and the soil temperatures that were available to it. On these long-term goals, I want you to think in terms of more landscape health. So lifting our eyes from an individual plant to an overall landscape. So looking at things like soil cover, the amount of perennial plants that we have. Are my landscapes resilient to things like erosion, both wind and water erosion? And then on the last bullet point up there is infiltration. And what I'm talking about there is when it rains or those wet snows, we really want to be able to move that moisture from the soil surface down into the soil profile as quickly as we can and get it down there where it's going to do good for our plants and not erode our soils on the surface. And the best way to improve our infiltration is to improve our vegetative cover on the soil surface. So you can really see how taking care of our individual grasses or our short-term goals is really going to lead us into looking at our long-term goals and making sure that our rangelands or our landscape as a whole are healthy. Okay, so we're going to move into more specifically talking about this PRF or pasture range and forage insurance product as one of these tools for drought mitigation. So this is a slide of the USDA's webpage where they talk about the PRF program. And really what the PRF program is an insurance program and you are insuring against a decrease in the amount of normal precipitation that you normally get. So what is it made up of? Okay, so there's a couple of big points that we need to go over for PRF. These are area plans only. So you are insuring against an area. Well, what's the area? Okay, so across the United States, the landmass is divided up into grids, and each grid is 17 miles by 17 miles. And you're going to be insuring at least one of those grids. And what you're insuring against is that the precipitation does not drop below normal. So on its most basic fundamental here, if the precipitation in one of those grids falls below a certain level during a certain time of year that you've insured, then you would get a payment. So there is no individual coverage. So this isn't going to cover a specific producer or a specific ranch. You're going to be covering a grid. So it would be possible that some of your ranches might be a small part of a grid, or it's also very possible that some of your ranches cover multiple grids. So if your ranch or your rangelands covered multiple grids, then you would want to make sure that you were insuring the appropriate grids that will be important to you. So then the other important thing is that we're going to be insuring against this deviation from the normal or historic level of precipitation. And part of this is that you can insure against different levels as well. But basically, the only way you get a payment on this one is if the precipitation that falls deviates below the normal or the historic precipitation. The precipitation is going to be measured from different weather stations. And of course, there's not weather stations in every single spot all across the United States. So there is some interpolation between the data points when they're looking at whether or not you got your grids. So the real advantages of this one are you don't have to keep any records. You don't have any loss adjustments. It doesn't reward poor management practices. There used to be a product that was based on the greenness or the vegetation index, basically satellite images of how well the vegetation was growing. That's no longer there. It's based solely on deviations below the normal or historic rainfall. The other thing is that, no matter how good or bad of a manager are you, none of that matters whether or not you get paid out in this insurance product. So in those ways, a producer, whether for good or for bad, you can't, unless you can make it rain or make it not rain, you cannot influence the outcome or losses. The other thing is that you have to insure certain time periods of the year. So remember in the first couple of slides, we talked about the importance of not only the amount of precipitation we get, but also the importance of when the precipitation comes. The other important part of this program is that you have to choose a 2-month time interval to insure against, that the precip does not fall below historic normals during those 2 months. So remember a little bit ago at the beginning of this presentation, we talked about the importance of precip, not only how much comes, but when it comes. So if we're in the example where we have cool season grasses and April and May are our most important months, then April and May might be the exact months that you want to insure against. So with this product, if you have insurance on a property in one of these grids that's 17 miles by 17 miles, and you have insured for the interval of April and May, and the precip falls below a historic normal for April and May, then you get a payment. It's as easy as that. Again, it doesn't matter your records. You don't need any of your records. It doesn't matter about your management practices. It doesn't matter about what the vegetation looks like. If it's weedy, if you're doing a good job as a range manager, you will get paid if the precip is below the historic normal. For this program, there are coverages for both grazing lands, so those we might usually call rangelands. They have to be suitable actually for grazing for livestock, and it's established acreage of perennial forages. And then there's also a part of the product for haying. And again, they have to be suitable for haying, but you can insure both grazing and haying lands. So a lot of producers ask us who decides if the precip was low or high. And I told you don't have to take records, so it's not based on anything that a producer is taking. So it's like you're not going to need to have a rain gauge or anything like that. It's based on what we call the rainfall index, and this comes from NOAA weather data. And they're going to be the one, that's where the data is going to come from to determine whether or not the precip is below normal or not. We also talked about the 2-month time periods, and you have to select at least 2 of those 2-month time intervals to insure. They don't have to be consecutive, but they cannot overlap. So you could insure April and May and June and July, but you couldn't insure April and May and June. Or you could insure April and May and September and October. Okay, so right now we're in a bit of a stage of limbo because there have been some proposed changes to the RMA program. Now, these changes, as of April of 2021, these changes have not been implemented, but it is proposed that these changes take place. And if they do, it'll probably be sometime in the year of 2022. So what are the proposed changes? The big one is they want to eliminate coverage for winter months. So we don't know exactly what they might define as winter. What months would be defined as winter? You know, is that going to be October through April, November through March? We don't know that, but they are looking at eliminating coverage for those months. And I think the theory behind that is we talked about the timing of precipitation. And if the winter precipitation isn't all that important, then there might be some who would think, why would we offer coverage for precipitation that isn't important? The next proposed change is to go from 2-month time intervals that you insure to 4-month time intervals. What that might do is lessen the importance of, say, one rainstorm event totally wiping out whether or not you got a payment. So let's say you had a 2-month time interval, you know, one rainstorm event that really might not have done all that good in to actually produce forage could bring your precipitation level close enough to historic averages that you wouldn't have gotten a payment. Where if it was in a longer 4-month time interval, one small rainstorm event wouldn't have such a big impact on whether or not you matched up with historic precipitation levels. The third factor that they're looking at changing is looking at livestock numbers. So would a producer insure against the amount of livestock he's grazing versus insuring the acreage itself? And then even another example within the livestock number factor would be looking at this stocking rate of 70%. So there is some data out there that gives us average AUM production on lands, and making sure or requiring that producers stock their ranges at 70% of the carrying capacity. So to get coverage, you would have to prove that you are stocking your lands at 70% of the carrying capacity. The fourth factor that they're looking at changing is this weighted county-based values. And this one again gets back to the importance of the timing of precipitation. So once again, we'll look at that April-May time zone. So if April and May is when you typically get, say, 40% of your precipitation, then that time interval of April and May would automatically be responsible for 40%. And so theoretically, if the precipitation came below that number, that's when you would get paid. That would be different than looking at, you would no longer need to assess your own percent of coverage. It would automatically be based on your county's value of the importance of when the precipitation comes. So currently the deadline is November 15th of every year to sign up for PRF. So another proposed change is to move that closing date from November 15th to December 1st. Another proposed change is to go to a smaller grid size. Now, I think the theory behind this one is that storms can be local sometimes, especially, right? So it would be possible, say, if you had a grid that was 17 miles by 17 miles, to get significant rain or snow in a portion of that grid while the rest of that grid remained dry. So by going to a smaller grid sizes, that would lessen the impact of those small localized storms for taking an entire 17 mile by 17 mile area out of a payment because of a small storm in one small spot of a grid. And then the last proposed change is to limit grid selection to physical location of acreage. So you would have to own or probably also have a grazing permit or a lease in a grid to actually be able to insure that grid for coverage under the PRF program.
All right, so we're talking about some of the reasons that a producer might use PRF range insurance, but we're also kind of interested in, what are some key range management principles that can help us manage risk besides just the insurance. So, Martin, what are some key factors you see, on range health going into the grazing season that you might take a look at on your ranges or pastures?
Sure. Well, fundamentally, what I want producers to do is at first to consider the potential of the site that they're on or the range they're on.
Right.
We're out here today in kind of a fairly dry environment with not a lot of deep soil, and so we wouldn't expect this site to be as prolific as, say, somewhere up in a high alpine meadow or even a riparian area. So right. I really want producers to consider the potential of their site and not to compare it to other places where you wouldn't have quite the potential to grow forage. The other big things is looking at your forages, how are my perennial forages growing? On most ranges, our perennial forages are really the strong ones that are out there. They're the ones that can provide the bulk of our feeds for our livestock. And they also provide cover for our soils, which are really important. So they prevent erosion, they compete against invasive species that might come in. So paying attention to those, whether they be grasses or shrubs, those perennial forages that are always out there that are the bulk of our feeds. Then looking at things like what's my bare ground out there? How are my rangelands armored against erosion both from wind and water are important things to look at. And then for livestock producers, one of the key ones is, do I have poisonous plants out there? Do I have plants that are going to be toxic to my animals? And what are my grazing management strategies going to be to avoid any losses from those toxic plants?
So I think that's good. I think another key thing that producers have to deal with when they're looking at pasture range and forage insurance is the idea of these intervals. So, you have to, I think they're moving towards doing 4 intervals throughout the year. But, what are some of those precipitation timing consequences as producers think about those intervals on the ranges?
Right. So with PRF, we're really worried about insuring against below average rain or snowfall. And those time intervals are key because on anywhere you've got a ranch, you have certain times of the year where precip is more valuable than other times of the year. So it might be that April and May are your key months for getting precipitation, and the precipitation that falls during those months is most important. If you have more of, say, a warm season grasses in your part of the country, it might be different from April and May. It might be more like May and June. But wherever your ranch is, you have those time intervals that are important, and those are the ones, especially when we're looking at getting PRF insurance, that we want to be paying attention to and insuring probably against those most valuable times for that when that precipitation might fall.
Yeah, I think producers that have followed that strategy of looking at those key interval times in terms of precipitation, as well as working with a good insurance provider to look at other sort of key points in time that they're seeing that insurance cover consistently, has really helped provide the sort of margin and support those producers need to sort of to minimize that risk and mitigate that risk of low precipitation on their ranch.
Absolutely, yeah, that's a key part of working with the PRF program.
I think it's vital to work with the PRF, but one of the benefits I think of looking at PRF and watching those intervals is it helps producers focus on those intervals and how they're affecting them with or without insurance, right? Watching their production and watching how they're managing.
Absolutely, and even getting ready to deal with a possible drought that's coming on. If you're in an area where April and May are your important precip times, and we're into mid-May and we haven't got the rain, it's probably time to prepare for a drought, whether we have an insurance product or not.
Yeah, and so often we get tied into, I go out the 1st of June, I come back at this time, or I do this, and sometimes watching that rainfall, watching water and watching our intervals, we might want to bump those a little if we have the opportunity to.
I'm curious, Bridger, what's been your experiences working with the Livestock Risk Management Working Group?
So we did a survey here not too long ago for producers to really ask them about different insurance products, and the PRF really rose to the top as the insurance product that livestock producers, sheep and cattle producers, utilize the most. It's the one they feel the most comfortable with. They've had great success with it, and I think it's really worked for them to help mitigate some of that risk that they see in their operations. There was a lot of positives, certainly from that survey. There were some concerns raised as well, in terms of some of that timing information, and sometimes it's frustrating that we'll see times where for the most part it's dry, but there's one little rain that comes through, and hits the rain gauge and triggers a different result than what we were thinking. So there's some frustrations with that. But in terms of overall use, producers really have been pretty pleased with that as a product and as a management tool on their operation. Yeah. So I think this has been a good conversation on PRF. I think we always say as a group, it might not be right for you every year. It might not be right for you any year, but you at least ought to take a look at it. Definitely, consider some ways to mitigate risk in your operation, and this is a great way to do that. We'd like to thank USDA Risk Management Agency for partially funding these videos. We'd like to thank you guys for watching the videos. Please be sure to like and subscribe to this channel and the videos. Really helps us out in terms of future planning. If you can comment down below how you might use some of these tools or what you've learned from these videos, that'd be really helpful. And also if you could comment down below on some future topics that you'd like to see us cover. With that, I guess that's the end of this video, and we'll see you on the other videos. Thanks for watching.